or you could do it through, there's certain companies that, and there's mutual funds that have baskets of different companies that are abroad that you can purchase. You can also go to a broker such as Charles Schwab or Euro Pacific Capital. Those companies sell gold stocks on foreign exchanges, which I think were not just gold stocks, but any stocks on foreign exchanges. You can even do financials, in places like China or in places like Australia. Those are much more potentially prosperous countries, I think. If you want to get into details as to why I don't think the United States is a great place to invest, you can look at all of my previous videos where I explain why the United States is not heading down the right path, why the bailouts are not a good use of taxpayer money, and why they're not going to help the economy to grow. So that's a sort of a short thought on how to invest your resources. I would consider renting, actually, rather than purchasing a house. Although you do get the benefits of the tax deductions, it's indisputable that the government makes it very attractive to buy a house by virtue of the fact that you do get the tax break, and you don't get that if you rent. But on the downside, if you do purchase a house, everybody says you're going to be able to put money into the equity of your house, and they think that's a benefit. But actually, I would argue that's actually the biggest drawback behind owning a house is not the equity you're going to build, but it's the equity you're going to lose. And when you say you're building equity in the house, it's merely explaining, or it's merely referring to the fact that you're going to take money that you otherwise would have been able to put into other resources or other assets such as stocks and bonds, and you're going to invest that in your property. And the thing is if the property value goes down, then your equity vanishes. Now, if the property value goes up, you gain and your house appreciates in value. But houses, as any other, it's an expense. It's not an investment. I mean, when you have a car, for example, a car degrades over time. Wear and tear occurs on a car. And it's the same way that goes for a house. A house, by the normal laws of economics and finance, should actually decrease in value. That particular item, if you purchase a house, it's brand new. Unless it becomes an antique or something, it becomes something that has some historical value. The house eventually is going to become worthless, and for every tear down that every house that we've had to tear down, that house at one point was a new house. So consider that when when people try to convince you that housing is this basically this piggy bank of money which you can draw from forever and that'll always appreciate in value. Housing is not an investment. Housing is an expense. And no matter how you cut it, if you pay for it by renting or pay for it by mortgaging, it's an expense either way. And the only benefit that there is right now to buying a house is that the government subsidizes it. In a down market, there would be absolutely no benefit except for the speculative potential for the house to appreciate in a market that swings upward. So in a down market, there really is no benefit to owning a house. And I believe we are still in a down market. And again, inflation is also hiding the fact that houses are losing value as well. So even if your house maintains value in an inflationary market, such as the one we will be experiencing, houses may not change in value, but their true value will be decreasing due to the fact that the monetary value is decreasing. Anyway, that's it for today, and I hope to talk to you soon.